That rand still looking pretty firm this morning, so trading in the mid 690s. That's after getting to the low 690s yesterday. Take us through some of the drivers of the rand at this stage, Michael.
Good morning, Stephen. I think it's really been a combination of firmer commodity prices and a weak dollar environment that have basically caused the rand to move down towards those low 690s. And of course, everyone is still watching those geopolitical tensions in North Africa, the Middle East, because that's really, I think, what's having a huge burn on that euro-dollar movement. We've seen that the euro-dollar went up to that 138 area. Once again, it kind of ran out of steam to the top side there. But of course, if those geopolitical tensions intensify, then we could see the dollar coming under, extended pressure, because the fear will be that the ECB might need to start hiking rates a lot sooner than that of the Fed.
And if the ECB starts hiking rates, what sort of weakness would you expect coming through from the dollar? I think the ECB is meeting this week and will give a statement on Thursday.
Yeah, look, we don't think they're going to hike rates this week, but we will be definitely looking to see the tone of that address, to see whether or not we could see a rate hike out of the ECB sooner than what we expect. At the moment, we expect a rate hike out of the ECB in the fourth quarter of this year, but possibly if these oil prices remain stubbornly high or continue to rise, then the ECB might need to bring that forward to maybe the second quarter of this year.
How about SARB activity in the market, Michael? Because when we saw the rand weakening in January and into February, we had those geopolitical tensions. We also had the SARB, though, quite active in the markets. Has the SARB withdrawn from the markets as February progressed?
Well, the SARB's in a bit of a difficult situation, I would imagine, because, of course, a weaker rand doesn't bode well for the inflation targeting mandate. And, especially if you couple the weakness in the rand that we've seen this year with now these rampant oil prices, they might be a little bit cautious about accumulating too many dollars at this stage. But we do, however, believe that they will accumulate dollars as and when conditions allow going forward. They were very quiet during the crisis times of the credit crunch, the sovereign debt crisis. I don't think that's going to continue, but they're obviously going to pick their moments. And of course, we've seen that quite clearly because they are now looking to buy dollars not only in the spot market but also in the forward market. So they're trying to time the market a little bit better and work with the market conditions rather than working against them.
Michael, you might have thought that the rand would have weakened yesterday on some of the economic data that came out, particularly the trade balance for January, coming in at almost minus 5 billion rand, and that was from a 10.3 billion rand surplus in December. And I know that December is a surplus month, January is a deficit month, but quite a steep deficit.
It was, Stephen, and of course there was going to be some kind of a turnaround due to the big surplus that we saw in the previous month. But, I do think the writing's on the wall in terms of the current account and the trade balance in this country. We've had a strong rand for a long period of time. That's not going to make our exports particularly competitive, and especially if China continues to hike its monetary stance and tighten up there, we could see our exports suffering. On the importation side, the strong rand has definitely induced greater importer demand. And then, when we look at the current account deficit as a whole, we've also got to bear in mind that corporate South Africa has recovered somewhat and are now starting to declare dividends again. And, we know that foreigners have bought a lot of JSE shares in recent years, and we'll have to pay dividends to those foreigners going forward. So all of that, a wider trade deficit coupled with dividend payments suggests to me that the current account deficit in South Africa is going to widen. And that's one of the key reasons why we think the rand is going to weaken this year, is because the current account is widening, or likely to widen, at a time when your portfolio flows and capital inflows into South Africa are starting to wane. And we've seen that yesterday in the money supply figures when they published the non-resident bond purchases and equity purchases. They were both negative. So the flows are starting to wane and the current account deficit is widening. So how are we going to finance this short gap, especially given that South Africa's savings rate, domestic savings rate, is still not particularly strong?
Michael, a big manufacturing data day today. We had, actually starting yesterday, we had the Chicago PMI coming in pretty good yesterday and giving the US markets a bit of a boost. This morning we had China's official PMI tapering back to 52.2. We also have our own PMI coming out in a short while. What's your expectations there?
We're expecting a further recovery in local manufacturing, but again, this recovery globally remains fairly fragile, and I think the manufacturing sector is no exception. In fact, I would think that the manufacturing sector is facing still a number of headwinds in the strong rand environment and fairly fragile global demand. So we've got to watch this space very carefully, because it is a big employer in South Africa and obviously pivotal to our GDP performance for the forthcoming year. But we do expect a bit more of an improvement. Manufacturers have tightened up in terms of their efficiency and productivity as much as possible, and we expect to see more of those dividends paying through when we see the numbers. But we're not expecting sharp improvement.